President Malpass, welcome back to the show. Good to have you.
Hi, Sarah.
Not such a cheerful report you put out today. The global economy is perilously close to recession. What is making you so nervous versus where you were a few months ago?
Thanks. There's several factors. One is inflation stayed higher for longer than people had been hoping, and so interest rates are going higher. The capital access of countries gets and of companies gets cut off progressively as this process goes on longer. And we also, of course, have the energy realignment that's taking a long time to sort out.
The thing is, investors, aren't as negative as you might be sounding. On Twitter, someone wrote back when I teased that you were coming on, Caterpillar's trading at a record high. If the world economy was perilously close to a recession, would Caterpillar, a global industrial that tracks growth, be at an all-time high?
That's a good input to you. So Caterpillar works largely, or has big markets in Asia, has big markets in the U.S. And one of the things my impression is going on is people are finishing projects that were funded some 6 months or a year ago, and so there actually is strong current demand that's showing in even in the GDP numbers. But the question is, what's it going to be in 2023? That's the forecast that we're looking at, and it looks like a sharp slowdown in most of the world.
China, though, is reopening. Are you not buying into that excitement? I saw you guys took down your China numbers as well by a full percentage point.
We did, but I think China is a key variable, and there may be some upside for China if they push through the COVID as quickly as they seem to be doing. Most of the world had a post-COVID rebound that was sharp. And China delayed that through the lockdowns. And so it's possible that they'll come through in the way you just described. China's big enough by itself to really lift global demand and supply. And so then one of the questions for the world would be, which does it do most? If it's mostly putting upward pressure on global demand, then that raises commodity prices, but it also means the Fed will be hiking for a longer period of time. I think a lot of this all just has to be worked out in 2023. And the dominant thing is we were at a 0% interest rate environment for much of the world for a decade or longer. And so there's lots of repricing that has to be figured out.
What is your expectation as far as when the Fed stops raising interest rates?
They'll probably stop after they're comfortable with the inflation expectations, and that depends somewhat on how fast people increase their production and the labor force. One of the frustrating things is that in the U.S., the labor force hasn't been rebounding, and you need a lot more people working in order to produce the goods and services that are needed by the economy. So those might be some of the factors the Fed will look at. They speak often and talk about their models, and so I'll be watching how they do that. The 10-year yield you saw backed up some today from, 3.5 to 3.6. And so you're seeing the market trying to figure out what the long-term resting rate is for interest rates around the world after, as I say, the dominant factor is over 10 years of near zero interest rates. Japan is still working that out because their 10-year yield is capped.
Yeah.
They have a price cap on it.
Do you think we've seen the peak in dollar strength for this hiking cycle? It's starting to come down pretty sharply, and that's been helpful, right, to the world economy?
Yes, it definitely helpful. I think the best model is to have the dollar be strong and stable over the long run. And so if that can be achieved at the current level, that would be a good outcome. And the question of whether it goes up or down against the euro or the yen depends really on the rate of rate hikes in the U.S. versus those economies, and I think that is just going to depend on a lot on who produces more. If the if the U.S. could really boost a lot of production, then that you'd end up with a somewhat stronger dollar, but a better growth outlook for the U.S. and so on around the world.